Good afternoon, everyone. We are here to discuss a concise yet critical analysis of the recently released Eurozone's Consumer Price Index, the CPI data for the month of June. These figures are without a question pivotal for assessing the region's inflationary trajectory and guiding future monetary policy considerations. Now let's start with the core CPI month over month for the month of June. This metric, which strips out volatile components like energy and unprocessed food, registered an actual reading of 0.4%. This contrasts with the prior month's reading at 0%, indicating a discernible uptick in underlying price pressures on a sequential basis. Now coming to the core CPI year over year for the month of June, this annual measure revealed an actual figure of 2.3%. Notably, this outcome precisely aligned with the market expectations, which also stood at 2.3%, mirroring the previous period's reading. This suggests a stable, albeit elevated, core inflation rate year on year. Now coming to the headline CPI year over year for the month of June, the headline inflation figure posted an actual value of 2%. This is a significant development as it perfectly converged with the market forecast of 2%, marking an uptick from the prior month's 1.9%. This brings headline inflation squarely in line with European Central Bank's target. Now coming to the CPI month over month for the month of June, the aggregate month over month inflation data indicated an increase of 0.3% in contrast to the previous reading of 0%. This further reinforces the observed positive momentum in the price growth on a short-term basis. Now coming to the implications of these robust figures, the implications are quite clear. The convergence of the headline inflation rate CPI year over year to the European Central Bank's 2% target is a salient development. Furthermore, the discernible positive momentum observed in both month over month indicators suggest that underlying price pressures are indeed firming within the Eurozone economy. Now, this robust data is likely to reinforce the ECB's current policy stance, potentially diminishing any immediate impetus for a more dovish pivot or aggressive interest rate reductions. Such an environment, characterized by inflation meeting the central bank's mandate, is generally perceived as supportive for the euro's valuation in the near term, as it could imply a relatively stable or higher for longer interest rate differential against other major currencies. That concludes our swift economic briefing on the latest Eurozone CPI release. Thank you for watching.